Good morning, Oracles. Well, welcome to the day after we had our Q2 earnings. As of right now, the stock is up 2.5% pre-market. Some people have started coming out with some estimates for second half. Some are coming in a little bit shy of the 50% year-over-year growth. But as we had discussed on the live stream last night, quite honestly, looking at their progression and growth going into the future, looking at how they're looking to be getting 40,000 vehicles out per week by the end of the year with a 2 million vehicle annual run rate, tells me all I need to know. So even if we fall shy of that 50%, really not going to be a big deal in my eyes. But I do have a feeling that they're going to be ramping up significantly faster than many people expect, and I think we are going to end up hitting that 50% year-over-year growth, which is a little bit over 1.4 million vehicles delivered for this year. And diving a little bit further into the numbers, looking at some reactions over on Twitter, Tesla did say that they're looking for a potential record half in the second half of this year. Now, obviously we're looking for that. James Stephenson over on Twitter has a graph for revenue growth every single year, and it goes quarter by quarter. And in every single year, the first half ends up making up about 2/3 to 3/4 of the previous year, and then it grows exponentially after that for the second half. And based on his graph, we are looking at the exact same growth pattern in this year, despite having a worse second quarter than the first quarter. So again, we knew that this was coming. We knew it was going to be a blip on the radar. But looking at the trends that we can see going forward, we can definitely see that, especially considering revenues will be growing significantly for Q3 and Q4, barring any major shutdowns or anything major in the macro environment. And then we can also be seeing costs coming down from Berlin and Austin, which means that profitability will skyrocket as well. So his graph is based on revenue growth, and we're definitely going to be seeing that, especially if we're going to be exponentially growing our production, which again, even if we don't hit the 50% year-over-year growth, it will still be significant growth because we'll probably hit, worst case scenario, 800,000 vehicles getting delivered in the second half, which is still well more than 50% of the growth from the first half of this year. And some other things that people had noticed were the fact that in Berlin, they did say that they had produced 1,000 vehicles per week, in June, which was awesome, and we had heard about this before. But a part that I had missed in there was the fact that they were gross margin positive for the quarter out of Berlin. So that's huge. They're already profitable coming out of Berlin in the second quarter, despite the fact that we had all of these headwinds and margins were down significantly. So with that going forward, we can anticipate that Austin will most likely be gross margin positive in Q3, and then Berlin will just continue to grow after that. So I am going to predict that we are going to be seeing over 30% vehicle margins coming into Q3 and then growing even higher from there. For gross profit margins, I would love to see them get back to 20%. I don't know if they're going to pull that off for Q3, but I think that they will definitely get there by Q4. And another piece that I had missed going through the earnings report was the fact that they actually brought their debt down even further. Last quarter, they were at about $100 million in debt, and this quarter they're at $66 million. So they increased their cash balance. Their cash flow was down a little bit, which we expected based upon the ramps, but they also brought debt down. So they're down to $66 million in debt. They might actually be debt-free by Q3, and if not by the end of Q3, definitely by the end of the year and have no debt whatsoever. Now, in the grand scheme of things, $66 million for them is basically like having no debt, but still, to see them continuing to chip away at their debt despite all of these headwinds is very bullish in my opinion. And of course, we had Jim Cramer chiming in, just riding that wave himself, saying that, it's hard not to like Tesla. Tesla's very popular all around the world, and I've seen from Jim in the past, he usually rides up and down. So when Tesla does well, he'll tout them. When Tesla doesn't do well, he'll say negative things, but it's just Jim being Jim, and we understand this. And so yes, and he's absolutely right. And that's part of the reason why Tesla is so successful, because they produce a product that people want. They show it with what they do versus with what they say. And sure, yes, Tesla says that they're going to do a lot of things, but they do have a track record of proving what they say. So again, going forward, looking at robo-taxis, looking at FSD, Optimus, Energy, these are things that they're saying. They proved what they could do in the past. That's why a lot of people like Tesla, because Tesla's proven it and they can see Tesla making these changes in the future. And because of things like that, we've got Bank of America raising their price target. We've seen a lot of price targets coming down recently, mostly because of macro environment type news, and then the shutdowns in Shanghai just kind of compressing some of the numbers in the near term. But Bank of America actually went up. They do have a neutral rating on the stock, but their stock price target went up from $900 to $950. And we did get some predictions over on Twitter saying we could see a credit rating upgrade over the next 3 to 4 weeks from the S&P. So now S&P last quarter did say that, they haven't reached their goals yet, that they want to see them at, and they'll, review it again later this year or next year. So I don't know if they're going to review it now. I'm sure they will. I'm sure they do it after every quarterly earnings report. So it'll be nice to see, because if we get that, that's going to be kind of a nice little surprise, especially if we get it by the end of August. And now looking at the fact that we do have on August 4th the annual shareholder meeting, that will be the next exciting piece of information we get out of Tesla that we know of. And then if we get the split at the end of August, looks like we could be getting that S&P rating upgrade at the same time. So I know some of you had asked in the live stream, do we think that we're going to be hitting $1,000 by the time we split? And I do think we need some macro things to lift in order for that to happen. However, if we get something like this and a credit upgrade before we go into the split, that is a potential that we could hit $1,000 as long as we don't get pulled back down again by the macro environment. Now, on the flip side of things, Reuters is putting out articles talking about how, it was quite factual in it when you read it, talking about the information when it comes to Tesla and the numbers and why we saw what we did in the second quarter. But then they start to try and justify its valuation and the multiple it has on it. And says, well, based upon the $17 billion in profit that they'll have by the end of the year, as projections show, if you put Ford's 14 multiple on top of that, that's only $240 billion. And so that means that their market cap should come down significantly. And but we do agree that Tesla is significantly more profitable. They have higher margins, even though they say that they're leagues ahead of their competition when it comes to sophistication of product and manufacturing. But, just basics of when it comes to the stock market and growth stocks and multiples, you attach a higher PE to stocks who have future growth. Ford is not a growth company anymore. They haven't been for 100 years. So yeah, a 14 multiple on Ford makes sense. But you can't put a 14 multiple on Tesla because Tesla still has a lot of growth ahead of them. So that is why you can put a higher PE and a higher multiple on Tesla as a stock. So all in all, the article from Reuters was not bad, but to put that negative spin on it is just what we see coming out of bears. So again, this is why, we see such a dichotomy when it comes down to, how people view the stock, because if you're going to compare it to a legacy automotive maker and the multiples that they have, it's not fair because Tesla is a growth stock and does have a lot more things in the future that other companies do not have. Now, granted, yes, these things have not come to fruition yet, and that's what a lot of people in the institutions are looking at, FSD isn't reality yet, working on it, but not reality yet. Robotaxis aren't real yet. Optimus isn't real yet. The energy part of their business is growing, but still not real yet. So all of these things aren't there yet, but that's why I put a higher multiple and a higher PE on the stock, because I believe these things in the future are going to happen. So we've got people who, view it where they don't think these things are going to happen in the future. We've got institutions who just only view what's real in the moment. And then we have those of us, which, by the way, retail takes up the majority of the stock shareholder portion of the company. And because of that, and retail, we are the ones who do believe what's going to happen in the future. And because of that, that's why the stock trades the way it does. Now, Kairov did some math for us over on the live stream yesterday, and based off of first half numbers, if you double the first half numbers of this year and attach a PE ratio to that, we're looking at a current PE of around 76. So that is still getting compressed, and seeing, going back to James Stephenson's graph, seeing as how we're going to see huge revenue growth for the second half, that to me shows that we are going to be compressing that PE even more significantly in the future, because the second half of this year definitely is not going to match the first half. So when you see that type of growth, that's why you put a higher multiple on the stock. So what the multiple should be for the stock, that varies widely, which is why we see such a wide range of price targets that are out there, because a slight change in PE ratio will change your price target for the future significantly. But again, this is why we pay attention to the fundamentals of, yes, the company is growing this far. You can see the future as much as you want to see it based upon whatever numbers you want to throw in there. Nobody knows for sure what the future is going to hold. But seeing the fundamental growth of the company tells me that they are worth a higher PE and a higher multiple than the legacy automotive makers for sure. So again, I loved these earnings. Let me hear your feedback in the comments below. How did you guys feel about it? What do you think we're going to be seeing for the future? What do you feel about all these other people's reactions for the stock and for the earnings? And do you think we're going to finish this week green? I know many of you have predicted that we're going to be seeing over $800 by the end of the week. Do you guys think that is a true number that we are going to see? Let me know your thoughts in the comments. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a Patreon. That link is also in the description. Thank you so much. Have a great one.